There we go. I think I'm recording. Yeah. Okay, so in this Zoom, I'm going to talk about market structure, and I'm going to try and make it into a rule-based method to understand whether how you can decide whether structure is bearish or bullish. So, because I want you guys, if I ask you a question, if I ask you whether a trend is bullish or bearish, I want you to be able to say it just like that. And there's only two rules that you need to be aware of. So let me move this out of the way. So obviously when we're learning how to trade, we say obviously from point A to point B. Okay, so this is obviously a bullish trend, right? But price doesn't move like this. Price moves like this, right? But in theory, this is how you see it in a textbook if you're trying to learn how to trade. But price doesn't actually move as clean as that. So it does make it a little bit difficult to understand structure. So what price actually does, you tend to get something like some weird shit like this, yeah? So it's nothing clear. But what happens is when price is doing this in here, and okay, that's not as difficult to understand. But in terms of these two, what tends to happen is you tend to question whether price is turning bearish, right? But you still need to understand the bigger picture. So what happens is before you get a start of a trend, what price tends to do is slows down. Why does that pop up there? Oh, no. Oh.
One time.
Oh. There we go. Oh, no. All right, I got this. So what tends to happen before price changes, right? So say we're going from a bearish move, price tends to slow down. Okay, then it forms like some sort of consolidation period. Now, this essentially is wick off, but we don't teach that because we don't need it. But that's essentially what's happening. Price is accumulating at this point. But then what happens, you'll get an impulse and a retrace and then an impulse again, right? And then you get whatever happens here and then price will carry on. Now, to understand what to confirm whether trend is bullish, what you first need is that first structural break, which is this impulse. Okay, so that's number one. You need this first break. Number two is you need a retrace that doesn't fail. So, it fails to create new lows. This is for a bullish trend. Okay, and that retrace needs to generate enough push to break structure. So that needs to break this structure. Let me. I can't rub out on it, can I? Do I have to delete the whole thing?
Yeah.
Nah.
Why don't you use one of those whiteboard sort of apps or something like that?
I would if I...
Paint 3D.
You're on Paint.
Boys, I can do some special thing, you know. I connect my iPad to it.
Oh yeah, you can mirror it, can't you?
Oh, don't kill it, man. I was gonna sound bare technical, you know. Like I'm doing some next coding shit. Right.
You're on Paint.
Use a Paint.
It's not funny, you know. It's a lot of hard. It's difficult for me.
Why are you so bad at technology?
I don't know. Considering I'm Asian as well, you'd expect
how old are you,
better. How old? I'm 24. 24.
Somehow.
I made it. I made it to 24. Worse than your dad.
Yeah, with technology. That's like 60.
That's a violation. Don't have that one.
And you never told me when your birthday is. I need to get you that T-shirt.
My birthday's ages. It's in August.
Oh, I'll remember.
Oh, shit. You won't remember. Actually, I think that was the last video I was drawing. Yeah, it is. That's the candle video. Yeah. Right. Can you guys see it?
Yeah, perfect.
Yeah.
Perfect. Okay. Okay. So what was I saying? So let's say price is coming down from a bearish trend, and we get this consolidation period. Now we get this impulse, and then we get some sort of move, and then it breaks structure. Actually, let me draw it a bit differently so I can make it a bit more complex. So you get that. Okay. So to confirm whether price is bullish or bearish, you need that first structural break, which is this impulse, and you need that retrace. So we also got a retrace here, here, and here. But to confirm whether price is bullish, that retrace needs to come and break this structure. So that's our structural point that price is breaking. and that is a confirmation that price has just turned bullish. So exactly the same thing as seeing as an LG. So this is essentially grabbing liquidity from the previous lows that's created, right? And then price is gone. Okay, so that's going to confirm whether price is bullish in this situation. So number one, you need that first impulse. And number two, sorry. There we go. Number two, you need that retrace. Now, bear in mind, the reason why we need this retrace is when price is obviously coming back, you have, say the previous low was here. You don't want price to violate this low. If price violates this low, then that means we are wrong, and price is going to continue going bearish. Okay, we need price to respect it, respect an OB here. We won't be looking for a trade at this point, unless you want to. If your risk appetite is high, then obviously go for it. But we want that confirmation that price is actually turning bullish, and once you get that, then obviously that you're looking for buys in that sense.
So this confirms change of trend.
Yes, yeah. So you need those two things. You need that impulse that breaks structure, and you need a retrace that generates enough power to break structure again. Okay, so you don't want when you get.
So it's only after the second break of structure that you'd be like sure that it was that bullish.
Yeah, essentially that.
Okay.
So when you get obviously the first impulse that breaks, then you get these weird retracements because price isn't that smooth. And then you get that Tan's in.
Tan's in.
Oh, wait, I never say my full name to be fair. Okay, so when you get this, okay, obviously you've got a break of structure here. But this impulse, right, created this high, okay? And is Dean here? Dean? I assume so. I swear I saw him. Okay, whether he's here or not. Okay, he's here. When you're marking a structural high, you use the wicks to map your structure. So, but we're still going off the body break. Does that make sense?
Can you repeat that, please?
So, when we're breaking structure, obviously we use the body. So say that's a structure break, right?
Yeah.
But say the next candle creates, okay, that's a bad example. Say the next candle creates a candle like this, but the wick is there. Map this as your high. So map that as your highest point. Okay, so when you're in this situation, obviously because price has broken structure here, we're not going to say that the OB is here. Why? Is because this retrace didn't break this structure. So this is not powerful enough to move and break this. So we can't say that that was the true move, okay? Because bear in mind, all we're trading is within a certain range, right? So say we just broke this structure, right? We are trading, and price is coming back. We're trading between this range. We're going to look at the most extreme point. The most extreme point is that down here, okay? Most likely. So whatever is happening here, it doesn't matter until price comes. There we go. Until price comes anywhere near here, okay? But that retrace, wherever it is, it needs to be the one that breaks the structure, and that will be your lower high. So forget everything else.
Wait.
Sorry.
I'm sorry.
Yeah.
I'm sorry. I don't understand. When you were talking about price, shit.
Sorry, TikTok.
Hold on. On the first drawing,
yeah.
The lower parts that you said that was not the break of structure.
Yeah.
Yes.
Yeah.
Why did you say that?
That's what I'm explaining now.
Hold on for 1 second, right? Because in real time, right, we don't know that the price is going to drop lower than that low, right?
No,
at that point, we don't know whether the price is going to go lower than that low. So now, if it's coming down to that low point you circled, right? Even though it broke that small high, why would you say that it's not big enough to like, I don't.
Okay, I think I understand what you're trying to say. So what it is, so that this first move, this first impulse created this high, yeah, this high here.
Okay.
Okay. Now, what's happening here is, although price broke this structure, it didn't break the high that was created by the main impulse, and that is where the OB comes in.
Okay. I totally understand now. So,
Is that right?
so this move in the middle, right? It's like
Yeah.
it's like noise. It's like
Yeah,
noise.
exactly.
Yeah,
Exactly.
yeah.
But you wouldn't know. You would need to look at the bigger picture because it's in real time. I understand. I
Yeah.
understand
So
now. I understand.
if it price did this though, say if price reacted to this OB but then broke structure, this is going to be our point of interest that we're going to trade from, not down here.
Okay.
So that initial structure, Tan's in again. That initial structure, right, that is here, once that's broken, that confirms that trend is bullish, and that's when we start looking for trades.
Okay. So we need to break the highest points from
Or
the
from
last
the first,
from the low. Yeah. So when you're marking out your weekly low, your daily low, and your hourly low, right? We are looking to break the highest points. Like if we're in a bullish trend now, we're looking to break the highest points from where from like the highest point from before the noise that we made. Yes.
yeah, exactly that. And regardless of what, it doesn't matter what time frame you're using, it's the same concept to confirm the trend on that time frame.
Oh, okay.
Does that make
All
sense?
right. Yes.
Yeah. Perfect. It's the same thing for if you're going bearish, which I'll cover now. So it's the same thing. Say price is obviously doing this. It starts slowing up, does all this random stuff. Then we get this impulse, and then price does this. It does this weird thing. Then it retraces and comes back. Okay. Again, same thing. We're not going to focus on this move that broke structure because it wasn't strong enough to break the overall high. No, low, sorry. Okay. This is a strong retrace, and that's where power was generated to break structure. So number one was this impulse that broke structure. Number two was that the retrace was successful. So that confirms that price has now gone bearish. So now we can start looking for trades at this point to continue. And that, if you look at it carefully, that is our entry confirmation. That's our LG, and that's our first entry. Our next entry will be here. And it doesn't matter what time frame you're looking at, this is all that you're following. So in terms of everything else, we are basically trading structure. That's all you need to see. We're not trading anything else. So although we're using OBs or IFCs or IPAs, whatever you want to call it, they're all the same thing. We're using that as our entry. But this is all we're trading. This is your blueprint, and that's all you need to imprint in your heads, that this is all we're looking for. So that's all we're training our eyes to see. Did that make sense?
Yeah, it does.
Yeah. So the first thing is we need the first impulse that breaks structure. Number two is we need a retrace, and to confirm that retrace, it needs to break the structure that was formed. So say in the situation where you're like this, you just break structure here, and then you obviously get these weird retraces, like something weird like this, and then you get one that's quite high, but quite low, sorry, that breaks structure. This is going to be your lower high. If price breaks that, that's going to change your trend, and you shouldn't expect price to come anywhere beyond the price that broke structure. Okay, so be confident in taking the OB that is here. Right?
Oh, wait. Sorry. So you're basically saying, right, that okay, but what happens to the top?
What do you
Right?
mean?
Like that's not the highest point.
I'm looking at a bearish move.
Yes, yes, it is a bearish move that 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 broke the lower high
Yeah.
and then went up. So why are you calling the second place? Sorry, that broke the higher lows. Sorry, why are you calling the second place
This
your
one?
lower high? Yes, your lower high, not the tip, not the top part, because
Because yeah, so this was the one that generated enough power to break the structure. So none of these were. All of these are like James. They're weak. Okay, they couldn't break any structure. Right.
Ouch.
Oh my
Ouch.
god.
This
James,
one
stand up
is
for yourself. Stand
Violation.
up.
They are short.
this one is me.
He's tweaking.
So I'm strong enough. I'm stronger than James. So I broke structure. Okay. So you only need to focus on the one that was strong enough to break the structure that was formed from the first impulse. Everything else is noise. We don't need to worry about that. And I think this is where the losses are happening. Even for me, the losses happen here, and I get tricked out as well. It's not always that clear, but that's because sometimes I can be a little bit impatient and start forcing trades from a break structure. So that's why, James, you cannot report bullying, by the way. I just saw the chat. That's why, we need to focus on the main structure point. So I wanted to make structure into a rule-based method where you can confirm whether trend is bullish or bearish.
Oh, okay. Thanks.
Okay. I didn't have time. I wasn't home, but I didn't have time to get any chart examples, to be fair. So what I'll do during the week, I'll record another video, a proper video about structure, and I'll post it up on the Discord. But that is what I wanted to give out today, just to make sure you guys have that and see if that makes any difference for you for this trade week to come.
Okay. Thank you. Thank you.
And somebody sent in an example of a third reversal.
I said it in, but I don't know if it's right. You lot can let me know if that's right. But it's an example of a failed one. Yeah, a Euro AUD on the 4 hour.
Let's have a look. On the 14th to 23rd. Where's it gone? Oh, there you go. Christ, what do I have marked out here? Where was it? The 2014.
Basically, what I'm saying in real time, if you were playing that out, that would be a situation where you might think it was going to go bullish.
Ah, yes, yeah. Okay, this is a very good example, actually. Yeah, thank you for that. Okay. So obviously, we can see this consolidation period, right? And the impulse created this this high, but the retrace that happened, it was too weak. Okay, it was James, and it couldn't make it, right? But instead, it carried on going, and price continued going short. Again, what happened?
Right,
this impulse.
Is
James here? Yeah, he's here. This impulse that obviously broke structure, but the retrace obviously should be coming somewhere around here.
Yeah, because this was the OB that generated the big move, yeah?
The big move, yeah. But our trend wasn't confirmed. Why? Because number two was that the retrace wasn't strong enough to break this structural high. So trend is still bearish.
Okay, so hold on, right? So at that retrace,
yeah,
because that is what you classify as a risky entry, yes?
This one, yeah.
Yes. Say okay, yeah. I understand now. Understand.
Yeah. So yeah, let me go to, because I think there might be a bearish. Yes, perfect. Okay, so sorry, I didn't mean to sound so excited there, but okay. So we obviously created this impulsive nature right here, impulsive move. The retrace happened here, okay, which obviously we would expect to hear, and that impulsive nature came and broke structure. But if you think about it, what's happening carefully, if you look at structure, what's happening inside is, where's my brush gone? So obviously we're creating this low, then we come up again, then we perform this base that comes and breaks structure. The break of structure happened from here, not from up here. Okay. And then that's where price, obviously it's easier for me to say in hindsight, but that is essentially what I've just shown you on my drawing. So if we see it, if you see it
Understand?
again,
Sorry. Is it possible for you to change to lines for a bit? I just want to see something.
yeah, how do I do that?
There is just close to the time
there.
after the mode. Yeah, you'd see. Oh, okay.
Oh yeah, it's even clearer on here. To be fair, the structure break came
it's
from
actually
here.
how it's how I find it. I just like change to lines and then.
That's a very good tip. To be fair, yeah. Thank you. That's a very good tip. Take notes, guys. That's a good one. I've never even checked lines. To be fair, James, do you? Is he that upset? He's not talking to me now. James?
I was thinking, what were you saying? Sorry, what did you say?
Have you ever used lines before?
I used to use it for daily and weekly. What do you call it?
Supply and demand.
Nah, like I've completely forgotten the word.
Basically, he never used it. He's just chatting shit.
Bias.
Oh, for like range.
Bias, that's the word. But no, I don't anymore. But no, it's good. It's just easier to see sometimes if the candles aren't very clean.
Yeah. But yeah, so that's the main concept that I wanted to show you about structure. Was there any part of that didn't make sense, or you don't understand the rule-based understanding of it? If there's anyone.
Hi, Tans.
Who is that?
I've got a question.
Yes.
Regarding continuation and candles that break structure. So what is there like a rule-based way we can say this is a continuation candle and this is a candle that led to the break of structure?
Right, yeah. Okay. Bear with me.
Or do we just have to get a feel of it?
No, I'll show you in a drawing. I forgot how I did that now. Bear with me. There we go. Okay, so in terms of continuations, let's use blue. So in terms of continuation, say when you get obviously candles like this, and the ones are shaded in. Okay, we'll do it like this. And then you obviously get a pullback, and then it carries on dropping. Okay, obviously it's very clear which is the OB in this point, but sometimes when you get trades, say if you get a break of structure, which is happening from this move here, but you get another bullish candle here, so that's the bullish candle, but it carries on going bearish, continues. That's a continuation. There's no pullback in that sense. However, in some situations, when you get obviously a drop that's coming, and then you form like some sort of a base, doesn't matter how many candles there are, could be 2 candles, and then sometimes you get a wick that comes, so that's the wick trick. That is a pullback on a lower time frames. So that would be an indication that would be the point that you'd be looking at as your point of interest. So in terms of continuation, is if the move is just continuing, but if you get some sort of base that's forming, that's where you would look for your OB in that sense. If that's the one that broke, so say structure broke from here, right? But this is your last bullish candle before the bearish move. That's not your OB here. Your OB is still going to be here. Whereas if you were to have, like for example, a base that's forming here and then it carries on dropping, your OB is here. Or if you were to have this, where you get 2 candles, 1 wick that comes like that, and then it keeps dropping, you still got that base there. That's your point of interest, that broke structure.
Sorry, Tan, but unless the base is equals, then obviously...
Hold on, you confused me there. What do you
mean?
Well,
if the base is equals, you'll obviously wait for the liquidity grab, don't you?
I still don't know what you mean.
So obviously that's a
talking?
wick trick. Me, Shredder.
Oh, yeah.
So basically, if this is so you got the wick trick there, but if that wick was just the base was equals, you'd wait for equals to be taken out, wouldn't you?
Yes, yeah. So
Yeah.
you would, yeah. There's no, wait, how'd I go back? Oh, there we go. So yeah, so if it was just like this, yeah, sorry, that's a good point actually. If it was just like this, there's no sense of a pullback here, but it is still a base that's formed. And if you want to use that as a POI, you can mark it out. But in this situation, it's probably best waiting for the most extreme point, which is here, because there's no indication of a pullback that caused structure to come. Now, in terms of what's going on inside the wick, make sure you've watched the candle video, because that would explain why this is so significant to have in terms of a point of interest.
Yeah, I watched
Answer the
that
question.
one.
Did that answer the continuation question? So,
Basically,
Yeah.
I'll rewatch the Zoom recording and then I'll go over some back testing. If it still doesn't make sense, I'll ask you on
yeah,
Discord.
there's a few. Oh, I can't remember which one it was. I'll find it on the Discord. It was a CAD yen trade where the continuation bit came up. I can't remember if it was November or September, something around there. There is a continuation candle which I explain on there. So have a look at that. I'll try find it myself. I can't remember. There's so many there. I can't remember which one it was, but if I find it, I'll post it into the group chat. But that explains the continuation bit.
All right, thanks.
And you plan on making a PDF of what's covered right now?
I'm going to do a separate video, and I'm going to try find. Well, I'm going to use actual trade examples to show you. Because because I realised that obviously structure, especially the way that I teach it, it's not the easiest. It is very hard, and sometimes it's quite hard to define what a trend actually is. So I was thinking this whole week, how can I make it as simple as possible? And I thought these are the only two criteria that need to be met. And if you guys can just focus on those two, you can confirm. If I was to ask you if this is bullish or bearish, you should be able to answer that straight away by just looking for those two things. Regardless of what time frame you're on, you can just look for those two things. Now, another thing that which I thought was quite good to sort of mention is, say for example, and it doesn't matter what time frame you are using. So say you get this. Why did I draw it like that? Oh, sorry. Okay, say you get this breaker structure, right? Oh, okay. So you get a breaker structure and price starts to come back. Okay, so now we've got tans. Okay, so we get a breaker structure here. Okay, and say price is already now cute dog. Say we got a price that's obviously bearish now. We confirm that trend is bearish. We are looking for an OB here. Now, obviously, whatever's happening is here. As I've said, it's noise. Okay. Now, to determine whether we can obviously stop looking at it, you want to see if you see in terms of range. So let me draw that in a different color. If you're seeing it in terms of range like this, we aren't interested in anything until it goes to the extremes. Okay. If price comes and breaks structure, price is gone, and we're going to be looking at a new POI. Okay. If it doesn't reach our first one, but if price doesn't come and break structure, if it doesn't do that, okay, what we're going to wait for is for price to reach our POI. So we're going to be patient. Doesn't matter what time frame you're doing. If you're on the 1 minute, the hourly, doesn't matter. We're still going to focus on that range. So a good example is, I'm pretty sure it's a good example. I just remember from the top of my head. So GBP USD. Let me get rid of the brush. Okay, so let's go to the hourly. Yeah, here. So obviously, when we're thinking about range here, so it's obviously here and here that came and broke this structure. We've got a pullback that came and broke structure, but we've got plenty of inbounds and price needs to come back. So you're going to hold for your price, and that'll be your high that's obviously formed. So price is now coming back into this. Okay, so we're patiently waiting whatever's happening. Price hasn't gone bearish. And ignore that this is the fact this is 1 hour. Regardless of what time frame, this is exactly what you're going to be doing. And you're going to replicate it on every single time frame that you're going to use. So once price is obviously entering the POI, which is in here, right? So let's go into this. Let's go 1 minute. I wonder why this is in my head. I think someone sent it. Yeah, someone sent it in the group actually. Yeah, that's why. Okay, so sorry, let's go to. Okay, that may confuse people. Let's go here. Okay, yeah. So what can we see is the same thing. Is we got this low that's here, and it formed this high. But although it obviously broke structure here, we still can't ignore the fact there's imbalance there that needs to be touched. So this is still forming the high that's there, okay? But we still, if there's imbalance there and a clear OB, then we still need to consider that as the trend, okay? Obviously, you can use half your risk here if you wanted to, but if there's clean imbalance, you've got a reason to. And if you get this point of interest that's sitting here, right, and say if you obviously get a good trigger and then price goes, and obviously when you break structure, you should be break even anyway. So there's no harm in taking a trade at this point because obviously it has broken structure, but price still has a reason to come back here. Okay, so just bear that in mind when you're taking this trade. So either use half your risk here or just use full risk, whatever risk you want to use. And obviously when price breaks structure, you move into break even as you would anyway. And you probably take some partials at this point if you want to. That's completely up to you. But you can't ignore, if there's anything that's clear underneath, you can't ignore the fact that this still broke structure. It broke, hold on a sec, because I realized I just drew loads on it.
I just want to circle it again, mate. Can't see it.
Shut up, man. Right, so obviously what we can see is it created this, this low, which obviously then broke this high. So it's a very small structure, but it obviously broke, and we've still got this POI that needs to be touched. If this POI was obviously mitigated, then this would be the cleanest entry to use. Price only came back. Why? Is because as retail traders, we aren't creating this move. The banks are, institutions are, right? That's why this is a footprint that we're going to trade off, and that's why price came back here. This trade was not wrong. Okay, even though this came and broke structure, it was not wrong to take a trade off this. In fact, that would have been a good entry, and I would have taken that myself. But you still need to bear in mind, if this trade fails, and if you watch the last GBP USD breakdown, it will explain this. If this trade fails, we know we've got POI, which is clean, which is here, right? So that is why this trade worked out so well. But we are focusing on what is happening inside the range. So it doesn't matter what time frame you're using. For example, even the weekly, like this was a very good example on the YouTube video actually, that we're trading obviously this. We're trading this range. That's why we're still continuing the fact that price is bullish, regardless of what time frame you're using. Okay, but you're still trading whatever range. It could be 1 minute, 2 minutes, 3 minutes, 4 minutes. I'm not going to keep counting, but it doesn't matter. You're just going to focus on what is happening at that moment within that. And you're going to look for if anything has been mitigated or not. Okay, so if we go back to... it's going to be hard to find it in a minute, isn't it? Let me get rid of my drawings. Where was it? Oh, there. So if you go back to here, same principle.
30-second, wasn't you?
Oh, yeah. Thank you. Wait, where was I? Oh, here, yeah. Okay. So exactly the same thing. We're going to focus on the ranges that's forming. Okay. So again, this was a very clear, obviously clear range to use between, 10. Bloody hell, man.
You like saying your name, don't you?
Here and here, only when I've done something stupid. But obviously we're still waiting for the extreme, which is here at this point, but we can't ignore what's happening below. So that's why I said, even if it's within the POI and you still got a clean OB that needs to be mitigated, go for that one. Okay, when I say I go for the extreme, that is the extreme. Okay, but obviously this is still a valid trade to take because it's still the one that generated power to break structure, right? But this one still broke structure on this point. Obviously, on the 30-second time frame is a little bit more difficult for some of you to see because if you don't have it. But it's exactly the same principle. I just thought this is a clearer example. But
Why
I'll
would
show
you
you.
go for? Why would you go for the extreme? Is that safe entry?
Yeah,
But you're more likely to miss a trade, aren't you?
yeah.
Okay, cool. I'm with you.
But remember, as traders, our first objective is to preserve capital. Okay, is not to risk it. Every trade is a risk, but we want to take the safest and highest probability trade, right? So if we miss trades, it's not really a problem because we know the next 1 to 10, 1 or whatever plus is just round the corner if we keep looking, all right? Because opportunities are everywhere, and we all know that, but we just need to be cautious of how we trade and not be too. It's up to you, actually. I'm not going to tell you how to trade, but it's up to you how aggressive you wish to be. For me, I like to be quite relaxed, so I wait for my points of interest to reach completely. So I don't care how long price, for example, let's go back to the hourly, and when price broke this structure here and came up, it took, how long did it take? It took 4 days to come to the point of interest. Now, this 4 days causes a lot of impatience. It's not saying that you can't trade, obviously counter trade, because you can, using the same principle, because on a lower time frame, that's probably going to show a bearish trend. And now we know how to confirm that, right? With our 2 steps. Simple as that. Exactly the same thing. We're going to do it here again, looking for a bullish. If you want to go counter trend, you need to confirm that trend is actually changing. And remember, price is fractal, so whatever price is doing in the lower time frame will replicate on the higher time frame. But if you're going counter trend, be realistic with your targets. So say, obviously, if you're going counter trend here, you're going to look for positions where you're going to buy from. You may look for buys from here. You're going to look for buys from here. So you're going to take partials at this point, or close your trade at that point, or take partials here and leave a little bit running just in case price continues to go down. Because we don't know. Regardless of, even if OBs are the reason why the markets move the way they do, we don't know that price is going to react to it. Okay, we will never know that. Price is unpredictable, so just bear that in mind. So that's why taking. Who's that?
Oh, sorry, just finish. I have a question to ask.
Yeah, go on.
Okay. So on this chart you're looking at, right? Where would we say the OB is for the structure that broke the high? No, on your left.
This.
Yes.
So the structure point came from here, because if you're looking at previous structure, you got 1 structure, 2 structure, 3. That came from this impulsive move here. And remember, this impulsive move can't come from retail traders. So this impulsive move is a footprint that the institutions were active at this point. So that gives us a true example that the institutions were active here. But in terms of here, although this came and broke structure again, you've got clear imbalance that price needs to come. So this is just inducement, okay? This is just enticing traders to take trades from this point. Because if, for example, if there was a candle wick that came and touched this OB, I wouldn't even look down here because there'll be no reason to. I'll be looking for a trade here. But price has got a reason to come back here and to go up because of the imbalance that needs to be corrected. So exactly the same thing as a 1 minute situation. Exactly the same. Oh God! Exactly the same thing as a 1 minute situation that was happening here. You've still got that clean OB below, which is why price had to come and mitigate it. And what we do is going to go for the extremes to have a safer and higher probability trade.
Okay, thank you.
Yeah.
Yes, yeah, I understand.
Perfect. Another question that.
Oh,
go on.
Yeah, so basically, let's say on the daily it's a bearish trend. Like, I'm not talking about this, I'm just talking hypothetically.
Oh, okay,
yeah. So let's say it's a bearish trend. You've just had confirmation from those the rules that you just told us for the market structure on the hourly, and there's been a change of trend. Would you trade with that new trend on the hourly, or would you try to stick with the daily that's already there?
So again, that's going back to understanding the fractal nature of the market. So you're trading counter trend. You're trading counter trend of the higher time frame, right? So you can trade that. That's not a problem. but just be realistic with your targets, and
Mhm.
obviously be a bit more aggressive when you're taking your partials or take profit, because a higher time frame trend is against you. But in that case, say for example you've got the daily. Say for example you've got this breaker structure, right? So the daily OB is up here, but then on the hourly, say that's a different color, but say the hourly is doing this, we've got a change in trend, right?
Mhm.
We can trade that up to our point of interest here.
Right.
Okay, there's no harm in doing that. And again, this can be replicated on any time frame that you're using. If you use the 1 hour for your base and use the 1 minute for your change in trend, you can get away with just that.
Mhm.
Same thing. It can replicate on any time frame. Cool. The question I was going to answer was when to take partials. So taking partials and when you take profit is completely up to you. What you'll do is, if you're going pro trend, it's like target structure points that you're going to break. So say you're taking this bot long here from the hourly, the first TP that you'll probably have is this structure, because price has no reason to react down and come back off it. Actually, it kind of does, because it didn't really break the structure. So yeah, potentially have your TP here, okay, or have your TP at every structure point here, or to take partials. It's completely up to you how you take that. In terms of moving your stop loss to break even, it's going to be the first or second breaker structure. If you get a breaker structure right like this, and you're already in the trade, but then you're obviously getting breaker structures here, but still it's not breaking structure of the structure that was formed, this OB still needs to be tapped. So don't move your stop loss just yet until this structure has been broken, because then price has no reason to come back here. You can use this OB for your next entry should you want it. So be careful when you're moving your stop loss. Sometimes we can move it a bit too early. So that answers that question. I don't think he's in this call, you know. No, he's not. James, what other questions did we have?
Got a question.
Oh, go on.
So it's actually about a specific pair, but it kind of feeds into what we were talking about market structure. USD CAD. I'm looking at it, and I don't know why, but I think it's going to start a reversal, but I'm not sure. So what I did was that because on the hourly it's inside the not the hourly, is it the daily order block? I believe it's already inside the daily order block.
Oh yeah.
So, but on the 15-minute chart, I feel like it's going to retrace back down to the 15-minute order block and then come up. Would you, when you're in like a daily order block, it doesn't have to touch the most extreme base of it, so the weekly low. It can just be in it and then reverse, can't it?
Yeah. If your entry criteria is met, it doesn't matter what time frame, but if your entry criteria is met, there's no harm in taking it. Exactly the same situation here, though, because obviously we've broken structure here. This impulsive move, you've got this range. You need a successful retrace to confirm that price is changing.
Yeah.
Okay, that probably may have happened somewhere here. If it did, then price should replicate, to be fair. Let's have a look. Let me get rid of my drawings. It looks like it has. Yeah, so so here, for example, this move came and broke this structure high. This structure was broken here, but it retraced. That's a successful retrace that came and broke. Oh, sorry, the retrace came from here. So price still hasn't come back to here. So again, if you're using
that's when the OB is.
Oh, perfect. Yeah. So that confirms, because that was the move that came and broke the structure. So this is number one of confirmation of a trend. And that's number two, successful retrace.
Okay.
That's a very good example. Yeah.
Wait. Sorry. I have a question. Yeah. Right. The part that you said is the number one, right? There is an OB there, and then after the OB, that tiny bearish candle is what you classify as a continuation, right?
This one?
No, the lowest point of the part you labeled one.
This one?
Yeah, no, the lowest part.
Where the equals are, Tams, on the bottom.
Yeah. Oh, there.
No.
The
lower than there. Lower, much lower to where the face is.
Here.
The U. Yes. Is that?
Yes. So these are continuations. Yeah.
So So where is the OB now?
So the part that broke structure was actually from this part here, from what I can see. Yeah, from this OB here, which was tapped and gone. But obviously we won't trade at this point because we don't have a confirmation that trend is going bullish.
Okay, but then if that was the OB that broke that structure, yes, it did retrace and break much below it there.
Yeah, but we shouldn't be looking for a trade at this point because remember, price is coming down bearish, right? It's not continuation of the bearish trend. Price is reversing, but we don't have confirmation that price is reversing.
So when do we have a confirmation?
So you know the rules I just said.
Yes.
Is obviously what happened was we got this low that created this structural high, and then we also got a retrace, right? But that retrace, these little pullbacks, these little impulses, they're nothing. But then this one comes and breaks structure. That confirms it. So that's number one of the rule, and that's number two.
Okay.
Or do we always
Okay, yeah. So price needs to come back to number two. Yes. Right?
Yeah, so at this point we won't be looking for a trade.
Yeah. Because we haven't actually confirmed that it won't still drop much lower.
Yeah.
Right?
Yeah.
Till it actually broke that, for example, the lower high that we have there. Right?
Yeah, exactly that.
Oh, okay.
Right?
Yeah.
Perfect.
Thank you.
No worries.
I got a question real quick.
Yeah.
So in terms of like the break of structures, right, and like the BOS, why is it that you look at the bodies rather than, and then some people look at like the candle wicks that as maybe like the break of structures? Because I'm in between whether like to look at the the break of structure as a wick break of structure or a candle close break of structure.
So that's something that comes as a personal preference. So when you're back testing, ideally you'll try to find what obviously works best for you. For me, a body break just confirms it. It gives me a bit more confidence that price is bullish. For me, if it's just a wick break, if it's just normally it's like a long wick which indicates a rejection. So I don't trust them. So I like to have a body. Some people like to have a body to body break. Again, it's your preference, but it still works either way if you want to take it that way. Sometimes waiting for a body break, it does have its downsides that sometimes you get a body break, price comes back, retraces, mitigates the OB, triggers perfectly and goes, but it doesn't give me a clear BOS. So sometimes it does have that downside, but I just get more confidence myself to use a body break.
Cool.
Doesn't James use wick?
I'm pretty sure it does, James.
Yeah, I'll do wick, but only if it's like, not if it's like a big reaction. So if it's like a fat off wick to the upside, and then it comes straight back down, I'm not interested. But if it wicks up again, and then maybe wicks up again, and then comes back down, then I'll count that. Cool. Like Tan says, it's completely up to you, really.
Yeah, because I understand that some obviously because price is so fractal. Like on the 1 minute that could be a wick, but on the 15-second time frame, that's the actual full body close. So
yeah, exactly. Yeah, So it's just what you find works for you in your back testing. For me, I've always used body breaks for as long as I remember. To be fair, I've never used wicks. I don't know. I just found like I was getting more fake outs using wicks, and the body to body break, something that I've came across quite recently. Is a new thing for me. I've not really tested it much. Actually, I might look into it just to see how effective it is. But for me, that was new, so I never used it.
Little back testing session for you tonight.
No, not tonight. Not tonight.
Anyways, I wanted to ask, NFP, was that the first, or is it going to be the next Friday?
It'll be the Friday coming, yeah.
Cool. So the first was Friday.
That was a bank holiday, so it won't be that.
Yeah, cool.
Did I answer the first question, by the way, about USD CAD? I can't remember because it was interrupted.
Yeah, you kind of, you did.
Did I cover everything that you wanted, or?
Yes, I was just basically asking kind of once you're in a daily. Wait, let me look back to it. Once you're in like a daily POS, then basically is that a good idea to try and preemptively try and see if that's a reversal? Well, it's a risk anyway. Every trade's a risk, but is that basically was that a good idea? Kind of that the idea that I had of bouncing off that 15-minute POS to see if it does reversal.
Yeah, I mean it's already mitigated half the OB, so you're sort of safe to take it anyway from this point.
Yeah.
It doesn't always reach the extremes.
That's what I was thinking.
Like the video on GBPUSD, it didn't reach it.
Yeah.
So if it does give you, so if you see the entry criteria, if it's met, then obviously take it. We've got full confidence and full reasoning why.
Yeah.
So as long as you have the why, then there's no reason why you shouldn't.
All right. And would you set your stop loss below the daily low? Would you just set a couple pips below where the OBS closes?
You'll use whatever OB. You'll put it below the low of the OB that you're using to enter.
Okay. Cool.
James, did Ben say what other questions he had? I think I covered everything in that.
I think you have. I'll have a quick look. Hang on.
I covered the partial one. The BOS questions were answered.
I mean, to be fair, I had a few questions for Ben about, his investments and whatnot, but obviously he's not here.
I can't answer for you. I'm afraid.
Where is he?
I don't actually know. He said it's an emergency, so.
Fair enough. That means his missus is having a go at him.
I don't know.
The only other one was, is FTMO reliable and sustainable to live off?
Oh yeah, that's a good one.
That was mine.
Yes and no. I mean, if you're not, if you're a consistent trader and can consistently withdraw from FTMO, then fair enough. But you can't expect to be living off that. So in the last Zoom call, when we explained, obviously, because it's good to have more incomes, because obviously you can be full-time traders and live off it, yes. But what you'll realize is most full-time traders have other things to make things sufficient, because you can't rely on the fact that you'll make a certain amount every month, and coming in with a target is going to make it hard. You're going to start chasing that target. So, like for me, I still have other incomes coming in because trading's not always consistent. Doesn't matter how consistent I am, but trading itself is not consistent. So having other incomes is a good thing, but trading can get you there. But yeah, FTMO is reliable, and if you treat it as your main account, then yeah, fair enough. You can.
You don't want it to your primary income anyway, just because of taxes.
No, yeah, exactly. It's not the best income, and I know it's probably what you see on Instagram is that people are claiming that this is all they do for a living, but it's most of it is affiliate marketing. Like Vertex is a side income for me, Ben, and James. It's another income really. So yeah. Alan has just sent a link into the chat.
Somebody asked what NFP was in it, but
who's asking when it was?
No, someone asked what it was.
Oh, okay.
So NFP is non-farm payroll, where I don't really know much about it. There's a big news release on with America basically, and it changes to dollar. But what you realize, it affects all markets essentially. I don't personally trade it because there's no point. You're basically gambling your money in that sense.
Markets are volatile then.
Yeah, very volatile, and your spreads are really bad, so it doesn't work. And on FTMO, you're not allowed to trade NFP anyway.
Well, why you not?
No, it doesn't let you, unless, to be fair, if you're already in a trade, it's fine, but it doesn't let you place a trade during NFP, so you can't trade any of the spikes. It won't register on their trade copier.
Tans, what do you think of this company called Ewan, what's CTA? Are you here?
It's like something in
City Traders.
I think you sent a link to that.
Yeah, because after every 10%, they double your account size, and the cap is 2 million. So
does 5%. They do the same thing. I think 5% is better, but
yeah, I think the thing with FCMO is that the leverage is probably the best I've seen.
The thing is with FTMO, if you do the maths, it's really like with a 100k account, you really got 10k because you can only go down. 10%. So in reality, you only got 10k. So and then the leverage is 100 to 1. So that means you got $1 million purchasing power.
Yeah, it's basically the purchasing power. That's what it is, really.
Yeah, it's $1 million. You got $1 million in purchasing power for one 100K FTMO account. But like with stuff like what's it, IC Market? What's it, 500 to 1?
500 to 1,
Yeah.
So if you had 6K in the IC Market account, you basically have a 300K FTMO account.
It's the same buying power, isn't it?
Yeah.
But would you see the same profits?
But but without the stipulations that FTMO have, you're not just profit sharing. You can trade how you like. So even if you have FTMO, I think the end goal is to whatever money you make, put into your pro and personal account so you can trade how you like.
Yeah,
I hear that.
Yeah. And I hope that most of you have that goal because I'll be honest, FTMO is another stress that nobody needs when you're trading. To be fair, like I froze it for December because I know I'm not going to trade that much anyway. But it's another hassle that you have to think about. Like, oh, are you getting close to your loss limit, or because I think I almost lost one of my FTMOs in end of September or November, something like that. I was very close to loss limit, and I was completely unaware because it's linked to my personal account, and I'm just taking trades as normal. Actually, no, when was it? August time, and then I switched over to having only high probability trades on FTMO, and then being a little bit risky on my personal.
See, nearly losing your FTMO really fucks with your psychology.
Mate, yeah. Thing is, it was more. I wasn't aware of the loss limit at the time because I don't check the FTMO account.
But it just links your main.
Yeah.
I've got a question real quick. In terms of like the trade copiers, like what are some trade copiers that you can use?
So there's a website called Social Trader Tools. It's probably the cheapest one and probably the best one to use. It's very simple. You just put in your login details. It's £20 a month for one account, and then it is weird because you can't just add account by account. So you only buy one. You could buy one account copier, or you can buy 5, and I think it goes in sets of 5, which is 5 is £60 a month or $60. That's the only one I'm aware of. James, are you aware of another one?
No, the only one I've ever used is Social Trader Tools.
Yeah, we've both used that, and we've never. Sometimes it does have issues if it's like a news spike that happens. The trade, where the heck did Ben come from? Sometimes the trade doesn't trigger on your trade copier. That's only if it's like spiked to news, which is why FTMO don't let you trade the news anyway because of this reason. I'll put the link in. I put it in somewhere, but I'll put the link in the Discord in the link section for you for that one.
Another thing I wanted to say about the CTI companies, they allow you to hold over weekends, so you don't have to close by the weekend. And someone like Raf, for example, he's holding trades.
Marketer.
Who, me? Fuck off. No, but what I'm saying is that 2 million, like you know.
What's the leverage on
the lot of money?
Now?
It makes more sense than if it is true.
They have a max lot size though, which it limits you to about 0.4% risk.
Sounds exactly that 5%.
Yeah, they've got a max lot size, but
don't they have like a 1.5 million
2 million cap?
2 million.
Yeah, cap. Yeah,
so it's
and every 10% you make, you get a double account size.
Yeah. That makes sense given this strategy.
I think it's 50-50 profit split as well instead, actually.
Yeah, but if your account's that size, then the capital makes it worth it, I guess.
Yeah.
For copy traders as well, FX Blue have one. The verification. It's a bit like profit. What's it called? My FX Book, but they also have a copy trading tool.
Duke.
That's so dumb. Was there any other questions?
Regarding lot sizes, what difference does it make, or how much of a difference does it make?
What do you mean?
Regarding, we were talking about Fiverr and CTI compared to, let's say, FTMO.
So the main difference that I found is obviously when you're using this strategy, is your lot size can be crazy, right? Regardless of what size account you have. The problem is you may not be able to use the sufficient lot size to like make 1% or 0.5% risk. Like on my spread betting account, I can only use 0.25% risk to safely manage my margin. And So I'm limited by what lot size I can use, even though that account is bigger than my IC one, if that makes sense.
Okay, so if let's say Fivers, for example, you start at 80K. Let's say you can go up to 320 or 160. Doesn't that, will the lot sizes not automatically go higher, or are you just limited to?
I don't actually know
You have to
much
message
about.
someone inside the company, and then I think they make changes depending on your account. You have to message them privately and something like that.
All right, fair enough. Thanks.
Yeah, I've never used 5%, so I don't really know how it works on the lot size. The one that me and Ben, remember the one that we tried to use, they gave us a 240K account as a loan, and you can only use 0.4, but that was fixed.
Oh, what happened to that guy? I've never seen him since.
Oh no, I blanked him. He kept asking, and he kept messaging me every single day to ask when am I going to sign up. I just thought it just seemed a bit weird, like the fact that he's chasing me. If he's actually earning like what, $1 million a month or whatever he said, you know, why would he be chasing me out of all people? So
he's the marketer. He works marketing for them. He gave me a free account as well.
Well, there we go.
I blew it up. How do you think I'm here?
Gosh. But yeah, like their lot sizes were fixed, and you know, I'm not going to use 0.4 on a 240K account. That's stupid. I could do that on a £1,000 account. It's actually 0.4. Yeah, on a £1,000 account, I could get away with that. So what's the point?
True.
Any other questions? This was a very good Zoom call, to be fair.
Shush.
Who said that?
Who do you think said that?
Tons. I got like a little weird question. Wait,
a weird
why
question.
do you not have auto on when you're on your chart? Like, you know, in the bottom right, you see auto.
Why should I have it on?
No, why do you not have it on? Because like you're always like zooming in and out, and it just seems so long to me. I don't know why you do it.
What makes people profitable? If you do that, you instantly double your profit.
Like,
But
you
what
can
is
just
it?
put auto on and zoom in. Like, put auto on and then scroll back. No, like use your cursor and just drag back, and it will just auto fit you to the screen. You don't need to like zoom in and out.
Whoa! Wait!
I didn't know that.
Mad! Mad!
Because like, every like video you make, I see you sitting there for like 10 minutes, like scrolling up and down, trying to get into the right place.
My eyes.
Got another tip for you as well.
I didn't know that.
You can also like right click here and then click on reset chart, and then it goes back to normal.
Wait. Wait. Does it?
I didn't know the little auto thing.
There's a little
Yeah,
reset button as well if you really want to.
This is mad.
No, so as long as you just don't like hit the side and scroll up and down, then it will just keep it on auto.
The videos are gonna be bare quick now.
Does your mouse not have a roller then, Tams?
Oh, yeah, it does. To be fair,
You just zoom in.
Because you always click on the screen.
I think it's control. Like if you put your mouse on where you want to go and then hold control and zoom in, it will zoom in directly on that.
Yeah.
Are you joking? Wait.
Oh.
What do I do?
Hold control and then scroll up, and it will zoom
Give
in.
him 5 minutes to find the control.
No way! Oh shit!
Shit. I'm literally mind blown. I didn't know that.
That's wait.
You learn new things every day,
This is sick. Alright, fair enough.
I got one more question. So if you've got two pairs that you're looking at in your watch list, let's say it's Euro USD and GBP USD, and you see kind of similar things because obviously they're heavily correlated, would you just pick the one that maybe has more imbalance in the forex strength?
I'll go for
I got a funny one for this on how you decide, right? So what you can do is, you ever heard of market sentiment?
Yeah, what retailers do and just do the opposite.
Yeah. So you can have a quick look, and basically you would just want to go against retail. So say you want to sell EU, and retail will go in the same way, but then you see the USD CHF, they're trying to sell that as well, but it looks good for a buy. Then take the one that goes against them.
Okay. What do you use? Which one do you use? Like the IG one?
Yeah, or just MyFXpert.
MyFXpert. Okay, cool.
Yeah, but sentiment's pretty good. I was going to do a post tomorrow. So I don't think that many people know about that.
Yeah, I used to look at the IG because IG got one with that's got market sentiment.
Yeah.
All right, cool. Thanks.
That's what I do.
All right. Is there any other trading view tips that you guys have? Someone said Alta. I knew that. I knew that one. I knew the inverse one, to be fair.
Yeah, I want more tips like that auto thing. I've never seen that.
That was sick.
I do not know about auto.
I've literally had that one since I've started trading.
Oh, why
The
not know
control
that?
one is sick. This one is decent. I can zoom into it. Look at that. What? Can I? If I want to see here, boom, I'm there. If I want to see here, boom, I'm there.
Oh no.
Nuts.
Ben, where were you?
Busy.
He's got diarrhea.
Has anyone
Hey.
passed FTMO with one trade?
Me and Ben did. Yeah, I mean, we actually did a video on that, to be fair. Well, it wasn't technically one trade. One was break even, then the other one was one trade, which passed.
So technically, you passed on one
Two
trade.
trade.
Yeah, so we took 2 trades, but yeah. Ash,
I
we look
mean,
good.
technically we'll
trade.
place them both side by side, so well, yeah, still 2 trades. No,
Ash,
I'm
why are you
trying
so red?
You know what? It's the light, lad. It's the light.
to-
You're high.
Right.
Oh,
Yeah,
yeah,
that
using
was-
order blocks.
No, that was using order blocks. Yeah. Right. Is there any other questions? If not, obviously, we'll end the Zoom here. I assume nothing. Is there anything in the chat that I didn't answer?
That was a good Zoom call in the end.
Oh, Harvey's a bit upset because he said the auto button. He told me that ages ago. But to be honest, Harvey, I don't really remember.
Does anyone actually listen to Harvey? Like what?
Harvey, one of the OGs. Right. Anyway, obviously we're all back trading this week anyway, so we'll be more active in our charts group as well. So have a good week. Obviously, trade safe. I don't know how markets will be this week. To be fair, it does take a few weeks for things to settle, but most of you have done really well anyway. It's been crazy. Like some of the results I've seen, given the fact that markets were supposedly dead, you guys are whacking out numbers like nothing. So like, fair play to you guys. But yeah, everything should be.
FTMO with Jordan.
Oh yeah, Kian. Yeah, well done, Kian. He's here now. Yeah, he's here. Yeah. So well done to Kian and Jordan for passing FTMO. That's
Did
it.
you
Yeah.
get a
So Ben's the one to speak about that. Wait, Ben? Did you ever send out the hoodies for the 2?
Yeah, 2
Oh, you did.
Right?
Yeah,
Is
I
Led
got
here?
mine.
And Gunjan got his, yeah?
Yeah, I got mine, bro. I sent it on the group.
Yes, but I didn't receive it yet. But
It
Because
must be
he's
lost.
halfway across the world, like, come on.
Okay,
I
yeah,
didn't
fair
get a
enough.
hoodie.
Tooney basically came to my missus' house and then hand delivered it.
Oi, James.
Did he actually?
Huh?
Did he actually?
No. But what you call it? He's only like about 20-30 minutes away from my missus.
Oh, no, you don't want him to go to your house, mate. Okay.
If he comes near my missus, then we're gonna have a problem, aren't we?
It's right. He won't do anything, mate.
Yeah, you should
James.
be perfectly fine.
James, I got a tip, mate. If you hold, someone said in the group, hold an F for F, Alt and F.
Yeah, I'm not
You
doing
can't
that.
even say.
Yeah, 'cause I'm that amazed. Look at that, mate. Do you know how quick I'm gonna like whack out these OBs?
You know, every single tool on TradingView has a shortcut. If you hover over it, it'll tell you what
No one
it is.
asked you, Ben. Shut up.
What was that?
Right.
Hold what?
Alt and F
What is that?
gives you Fibonacci.
Oh, swear.
Oi, look at that madness here.
There's keyboard shortcuts on the. If you go to the little thing at the top left-hand corner, you know the 3 lines. Yeah, over there, where it's where you got number 11.
Hans don't know it's right and left.
Go down to keyboard shortcuts. Click there, and that's everything you need. Click on it. Yeah, and that's all the shortcuts.
Oh shit! Can you
It's like,
assign them
it's
as
like
well?
GTA 5 cheat code, isn't it? That is.
Fans, Alt F4 is a really good shortcut.
Shut up. I know that. I may be dumb, but not that dumb.
Wait, Tans, I got a question here. How'd you get rid of your side what's it, the bar on the side, and you got like the little toolbar at the bottom?
I can't tell you. Secret.
Oh, fuck off, man. How'd you do it?
Basically, you got the drawing panel here, and you put wherever you want, and you just put a star next to it.
Yeah.
And it comes up here, and then you could just hide that.
Cool.
What's your 6-1 in, the arrow tool thing?
What?
On your favorite
This
spot?
one?
Yeah.
What's the path?
Oh. I just
See,
draw
Ben,
lines.
Ben, if you actually made videos, you know about that one.
Yeah.
Oh,
Draw mine with lines.
Shed lines even worse.
I did expect that one too. Right. I hope everyone has a good week, and I'll speak to you all in the group. I hope I've answered all your market structure questions as well. I will do a video on this and find examples as well on the charts. But I hope the rule-based method will help clear things up for you guys. Well, I hope it does. If it doesn't, I'm not sure how. I'll find another way to teach it. But yeah, hope that works out for this week. But for now, we'll leave you guys be. And yeah, trade safe.
Yeah, thanks, Towns.
Thanks, Towns.
No worries, mate.
Yeah.
Nice one.
boys.
See you later, lads.
In a bit.
How do I end this call? How do I end the call? Mate.
Make sure you stop recording first, mate.
Oh, yeah.